Today we had the third of the very important data pieces that came out this week. Of course, we had CPI, which cooled this week. We had PPI, which cooled this week. And we had retail sales that cooled this week, and the market tanked. We've got to talk all about it, and we'll take a look at the charts in just a second. But first, let's go over what happened in case you missed the numbers. US retail sales fell more than expected, sank 1% month over month in March following a downwardly revised 0.2% fall in February, and way more than market forecasts of a 0.4% drop, in a sign that cost pressures and rising interest rates are weighing on consumers' willingness to spend. Now, let me pause and tell you guys, this is actually what the Federal Reserve wants. They want spending to cool a little bit. They want jobs to cool a little bit. And it's not just because there's some big evil entity. Well, I guess it depends who you ask. Some people would say they're a big evil entity, but I would just say that they're trying to get this inflation problem under control. And in order to do that, they have to hurt something else. They have to hurt jobs a little bit. They have to hurt inflation They have to hurt spending and savings a little bit in order to fix that problem. Anyways, let's take a look at the charts, and I have some very specific ideas that I want to share with you guys here today. First, let's talk about probably the weirdest reaction to have happened. Now, this week we had, like I said, CPI, PPI, and retail sales. Up until today, the market has been pretty much tanking, selling off in response to CPI numbers as well as PPI numbers, right? Both of them came out cooler than expected. And this is the dollar, by the way. We're looking at the US dollar currency index. The dollar has been tanking. It broke through a key level of support, and by all means, in my opinion, still looks very, very bearish. Now, today, a little bit of a weird reaction in my opinion, because again, retail sales cooled more than expected, and yet the dollar rallied on that. Possibly you could make a case for there's just some profit taking, it's Friday, that sort of thing. Regardless the reason, I think that this pop, in my opinion, is a possible selling opportunity on the dollar, and specifically some other assets that I trade regularly, we will be taking a look at in this video. But from a technical perspective, the dollar has made a really good run from 102.8 all the way down to 100.7 or 100.8. That's a entire $2, I guess, is it dollars? 2-point move here from 102.8 down to 100.8, let's call it. That's an impressive move. If we get the rally on the dollar here back up to the 38.2, I think that's a much needed pullback on this dollar bearish idea. And in that perspective, I actually think that this is an excellent shorting opportunity on the dollar. So if you're trading dollar pairs, that might be something to pay attention to, or more likely where I like to trade the most, gold, indices, etc. We take a look at the gold market. The gold market is getting a great pullback here today. And in my opinion, this is a buying opportunity. I'll say it again. This is my opinion, not necessarily what I'm telling anyone else to do on the internet. I have to clarify that because, again, you never know when a brand new trader comes on and they say, well, oh, Nick thinks it's a buy, so it's got to go up, because I can be wrong, and I am wrong often. When it comes to trading, it's not about being right all the time. It's about making it count when you are right. Regardless, I think that gold has a good opportunity here to potentially be a bullish setup as we enter into this 38.2 to 50% retracement zone. I would call this a pretty healthy pullback after the strong run up that we had, but I like the gold market going much higher. I think I've mentioned this before, I think we have room to head up to the red zone, which is in fact our all-time high that we marked during 2020, as well as 2022 early on when we had the invasion of Ukraine by Russia. So in my opinion, I think we're headed back to retest those levels as interest rates are expected to sort of rise one more time, stay there, and fall by the end of the year. I'll show you guys that in just a second in a little bit more detail when we take a look at the EdgeFinder. In my take, though, I think that the gold market here is a pullback buy opportunity. I will be looking to potentially take that trade long. And if I do take that trade long, I will be sharing it inside of our Discord channel. I share all of my trades with full breakdowns. You guys see the videos here where I talk basically my analysis and such. But when I actually take the trades, I share them inside of our Discord channel. I have one trade currently open. I am long the S&P 500. Here is what that trade looks like currently. I'll pull it up on the screen so that we can watch this. So if I go SPY, and this is my trade, I'm up about $380, so nothing crazy on that move. We'll possibly talk about the S&P in just a moment. But again, I am looking for a possibility to get long gold, and I will be watching the chart here today to see if I can find an opportunity to do so. Now, I wanted to mention, again, I talked briefly about interest rate forecasts there, which is what this is all really about. The market is paying heavily to the interest rate forecast. And we've got this on the Fed tracker. So if you guys are regular users of our software, the EdgeFinder, or if you're not, this data is very, very interesting. What we're looking at is the interest rate versus inflation rate forecast off of the Fed tracker page. Right now, the forecast for the market is that we see another rate hike in May. We have an upcoming meeting, which will cause some pressure or will cause some volatility on things like gold, the S&P, and the dollar crosses. But I wanted to show you something. Inflation is expected to continue to cool. And if you look at this last bar here, some consensus is lending towards, and I do tend to think that this is possible, we could have a rate cut by the end of year or possibly going into the next year, 2024. If this happens, it has a strong upward pressure on stocks, the gold market, and some downward pressure on gold. I'm sorry, on the dollar. Very notable stuff to take a look at is this interest rate and inflation rate forecast. So we're keeping a close eye on this one. Now, in terms of watch lists, you can see that in terms of trade setups, we are still long biased on gold. It's still showing up as a strong buy opportunity for several reasons, as we've gone over in previous videos. So I don't want to just sort of repeat myself too much there. We're still also long biased on the S&P. So gold, S&P, and also I've been trading GJ long. I might look at that one here with you guys real quick. In fact, let's do that now. We'll take a look at GBP, JPY. So this and gold are two things that are on my watch list here today. I've got this chart marked up. We've got a low to high move here. If price comes down to the 38.2, I'm mildly interested in possibly picking it up long on that pullback. So I do like GJ as well. It is one of our top rated signals on the EdgeFinder at this time. We have a strong, we have a buy bias on it. We also have a buy bias, notably on a lot of yen crosses: GJ, EJ, AJ, NJ, CJ, and that's all. But anyways, yeah, you can see, oh, I'm sorry, Swiss yen as well. So almost all yen crosses printing bullish readings here right now. The yen seems to be very weak. And if we take a look at the smart money tracker, again, we have a heavy preference for shorting on the Japanese yen, right? A huge preference for the short side there, which I think is very telling. When you have big money short on this asset, it oftentimes will lead to big runs on that market. Not always, but often enough that it's interesting to know. Anyways, this is the Smart Money Tracker. You can keep track of all of Institutional's positioning in terms of the Commitment of Traders report that comes out once a week. When we take a look at specifically at the Japanese yen, you can see there is a huge preference for the short side of the trade. These are short contracts open, 68.5 thousand versus only 11.5 thousand on the long side. And again, you can see the long contracts, the change, short contracts change as well. If you guys want access to this data, we'll take a quick pause to mention our sponsors. Ourselves, we are our own sponsors in the sense that we're a software company out of Atlanta, Georgia. We build tools for traders. And if you want access to our software here, we are doing our biggest sale of the entire year right now. We're giving 40% off if you use the link and promo code down below in the description, or if you want a bigger discount for a limited time, if you use this link in the description, it's going to take you to a live chat feature. If you click this link and you click tell me about your discounts, fill in your name, all that good stuff, you'll be directed to a conversation. You'll open up a live chat with one of my staff, one of my support reps here that is trained on how to show you how to use the software and get you set up with an EdgeFinder copy. If you've been thinking about it, take advantage, get 40+% off for a limited time using that link down below in the description to chat with one of our support reps. And yeah, there you go. So anyways, the couple trade setups that I'm looking at, I like gold long and I like GJ long. And if I do take that trade, again, we'll share it in Discord here today. I do think I'm probably going to pick up that gold trade despite it being Friday. The pullback here looks pretty juicy in my opinion. Thanks for watching, guys. Have a great weekend. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.